right, wonderful. So hopefully everyone can see this. I just pause there for a second for the second safe harbor of the day. So BTCS stands for Blockchain Technology Consensus Solutions. Just kind of high level, we are the oldest public company I think in the world in the crypto space. We've been around since 2014. I think some of the core highlights most recently is really starting around 2021. We launched into Node Ops. And then we launched into Builder Plus, which is our second line of business, in Ethereum, most recently in 2025. And I'll touch on all of those as we go through this presentation further. So taking a step back, I want to talk about Ethereum's performance. I mean, obviously it's down from its highs in the summer of 2025. However, if you just zoom out a little bit, Ethereum's percentage performance since the beginning has really been phenomenal. It's outperformed the likes of Nvidia, Bitcoin, Strategy, etc. So it obviously has a lot of volatility, but if you've been a long-term holder since for a decade, it's performed very well. And based on the fundamentals, we believe that that's something that will continue to occur. So thinking about adoption and why Ethereum matters, really it's the leading smart contract blockchain that powers the tokenization of real world assets. So what that really means is as the digital as finance goes online, whether that's stable coins, whether that's tokenized securities, it is the number one platform or security layer on which these are built. And you can really see the projections of where analysts see this going over the coming years compared to where we are today. And so with the regulatory changes, and I'll touch on that in a little bit, there's been a lot of institutions that are really focused on adopting this technology to improve the back end processes of how the transfer of assets, real world assets, work. And so what does that look like? There's a whole DeFi or decentralized finance economy that's starting to really ramp up in terms of the number of trades online, the amount of stablecoin volume. And I'm excited to see other real world assets like security. I mean, I recently received an email from NASDAQ that they're looking to tokenize their equities as well. And I think that really kind of moves on to this next side of, a regulatory update and just clarity. I mean, we had the Genius Act, which was did the oversight of stablecoins, and I think that was kind of the first step. The next one is the Clarity Act, which is the really market structure, and I think that's something that's getting worked through Congress right now. There's a lot of opinions on both from traditional financial players as well as cryptocurrency focused companies like Coinbase that have their viewpoint. A lot of it comes down to yield on stable coins or being able to offer returns. The implications for BTCS are huge, I think, and for the broader industry. If we have this clarity, more financial institutions will come into play. It'll become more mainstream and should, knock on wood, help drive both the price of Ethereum and the activity in Ethereum, where we generate all of our revenue. And so that's something we're optimistic that we'll get clarity on in 2026. I think the one thing to note is most of the things that are getting debated today, and there's kind of two sides of the fence between traditional financial markets as well as those centralized exchanges within the cryptocurrency space, specifically with respect to yield. It doesn't really affect us. We'll benefit either way this goes. So we're just optimistic that something will come in 2026. So now that I've kind of given some framework on why Ethereum, what the outlook looks for it from a regulatory standpoint, there's kind of thinking about how do you get exposure to this industry. And I would think blockchain technology, as it's not as sexy as AI, which everybody's talking about today, is the foundation of how assets will move globally. And it's something that AI and automation is going to be able to leverage as well. So these two things do actually go a little bit hand in hand. And moving on to, well, how do you get exposure? Well, the most basic way, if we're going to do it in the traditional markets and not on chain, having your own wallet, is you can go buy an ETF. There's, I think, 10 or 12 Ethereum focused ETFs. That's pretty boilerplate, one-to-one exposure. You can go buy a digital asset treasury. We don't really put ourselves in that bucket where they may add leverage, they may stake, they may add some hedging, but pretty much you are getting just exposure to the underlying token with no operating business. And this is where we kind of shine. We're not a new pivot into um, the blockchain space or Ethereum. We've been, as I said earlier, we've been public for since 2014. We're the oldest public company in the crypto space. We have integrated operations. We have a unique DeFi, TradFi capital formation strategy, and we offer our kind of a participation in the on-chain economy, because that's where our businesses, our three business lines are focused. And I'll talk about those a little bit more. So what does that really mean? Like, our goal to drive shareholder value is, really quite simple. We have the operating side on the left and the kind of capital formation side on the right. On the capital formation side, obviously, we're targeting share price appreciation. We don't control the market, so that's gonna just we're kind of living with what we get. We'll raise capital strategically to accumulate assets and really use those assets to generate revenue through our operating businesses. Right now, we have three operating businesses: NodeOps, Builder Plus, and Imperium. Imperium is the newest business line that we've introduced, and I'll start talking about each of these kind of three pillars individually. So Builder Plus, to kind of put this simple, it's often referred to as block building, and what we do is we are basically participating in the block building value chain. We purchase block space from validators and for a fixed price in an auction, and then we get to keep all of the transaction fees within the block we build. So right now, over 90% of the blocks being built are being sold in an auction by validators, and the remaining percent, the validators are building those blocks themselves, which is pretty plain vanilla. So that has been a high growth business line for us in terms of revenue. NodeOps is the other business. That's where we actually run our own validator nodes. We do that through solo nodes as well as through Rocket Pool, in which it's we earn fees on other people's staked ETH as well. And then the third business line is Imperium, where we participate in kind of on-chain DeFi markets, and we are effectively providing liquidity and for lending and borrowing and other activities on chain. And so what does that kind of look like if I had to, from a high level, is NodeOps it's a low growth business, and this is really for any company or any other public company that wants to get into staking or running nodes. It is low growth because you need to provide additional capital to do that. So what you earn on the capital deployed is pretty consistent. You can maximize that, but beyond that, there's not much you can do. Obviously, you're subject to price changes, but it's very high margin. The cost to do that is extremely low, and a lot of those costs can be fixed costs, provided you are not using a third-party staking provider, which we do not use. So much of our NodeOps costs are effectively fixed costs. So it does scale well, and we do better than many others. Builder Plus it's a low margin business at best, but it's been very high growth, and it's something that we've been pursuing for some time, and it integrates very well with NodeOps. And then the third is Imperium, which is really going to be a focus for 2026. We spent a lot of time in 2025 preparing and testing and deploying here, where we believe it'll be both high growth and high margin. So it's kind of the best of both worlds. And if you look at the breakdown for 2025 based on unaudited results, Builder Plus is 80% of our revenue, and Imperium's a mere 8% compared to the 12% we had for NodeOps. Looking towards 2026, while I can't provide any assurances or guarantees, we're really targeting having Imperium be a much larger percent of our revenue mix, because it is both high growth and high margin. And I think that's where we're really differentiated from all of the other, um, uh, public companies that are focused on Ethereum and even other tokens within the blockchain ecosystem. So looking at how big these market opportunities are, um, Builder Plus is I think the smallest market opportunity. We kind of view that based on the data we've been able to gather as close to a $400 million revenue opportunity. Node Ops is a substantially bigger opportunity, about 2.2 billion. And Imperium is, substantially bigger than Builder Plus, albeit smaller than Node Ops at about 1.5 billion. And obviously, these values are based on the price of Ethereum. So if Ethereum was to, go back to where it was in this, the summer of last year, all of these values would double. So they flux. These are all based on a dollar value amount. And for each of these different segments, we have different competitors that were within the space. So looking at kind of the financial picture, it's been amazing year for 2025. I mean, if you just look at our growth trajectory, we've gone from, 1.3 million in 2023 to 4 million in 2024 to 16 million unaudited in 2025. So it's been phenomenal growth on the revenue side. And 2026 is a year where we're also going to start focusing on gross profit as well. And if you look at what that looks like on a quarterly basis, the we've had substantial growth quarter to quarter. Obviously, there's some fluctuations, and a lot of that can be driven by the market price of Ethereum. Um, so moving along, what does our cap table look like? We have a great cap table. We have about close to 50 million shares of common stock outstanding. It grows to about 50, almost 59 fully diluted. That assumes the conversion of convertible debt. Those are both listed there. We have 7 million of convertible debt at 585 and 10 million of convertible debt at $13. The convert doesn't have any, they don't have any, toxic death spiral features. So it's something that, especially given our size, it's a very low portion. We could just pay it off if need be. If it doesn't convert out, our hope is, and obviously again, no promises or guarantees, that if we deliver on the operating side, the share price will reflect that, and then those notes would get converted out. Those notes were about a 40% discount to what we could have raised money at on a converted basis, inclusive of the warrants, compared to using our ATM. So it's been a very 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 effective cost of capital. And then the warrants, obviously they're right now out of the money, but they are cash exercise only. So to the extent the stock goes up, there are no longer any funky formulas that would hinder our ability to raise cash off those warrants and clean up the balance sheet. As far as leadership team, we've expanded just as a company wide. We've almost doubled the size of our staff in 2025, so it's great. We're definitely more technically heavy now than we were previously. As far as our key people, we've got Mike Provost, who's been the CFO now for many years. Ben Hunter joined us a few years ago, was recently promoted to the CTO, and Eldari is our Ethereum team lead, and we've got a great board as well. And so I guess I'm hitting the 15-minute mark, so I'll go with some key takeaways. We're a really unique play that I think most people don't fully understand within the sector. We've got continuing revenue growth and scaling operations. We've got financial flexibility in the way in which we raise capital. We're definitely the most seasoned public crypto company probably in the world. We've been around for 10 plus years and have, there hasn't been a single cycle that's put us out of business. And finally, after more than a decade, we've got regulatory tailwinds that are both supporting Ethereum, stablecoins, DeFi, and the whole cryptocurrency sector. And as we've seen in the last year, as these new entrants come in, it brings more attention and understanding to this space, and I think that should help drive value and credibility to, what we've been working on for the better part of a decade. And obviously, I've talked about all the numbers, but you have some snapshots of our financials there. So I guess with that, that really wraps up the presentation portion. I guess I'm about a minute over, but I will hand it over to questions now.
Thank you, Charles. Definitely some exciting times for the company. I see you received a few questions during the presentation that maybe you could answer. Please read the question aloud before answering. The questions are at the bottom of your Zoom
Sure, sure,
screen.
sure. Um, so the first question is, what percentage of revenue today comes from staking rewards versus transaction fees or other services, and how do you expect the mix to evolve over the next 2 years? So, I mean, that's almost a two-part question. Um, Staking, if we look at staking rewards, and there are two components to staking rewards. There's execution fees and transaction fees. For simplicity's sake, let's just bundle that and say, um, right now, node ops, which is basically our staking business, is 12% of total revenue. We see that hopefully decreasing because other revenue streams grow. And we would, where I would like to be in a couple years is to have our high growth, high margin business comprising the majority of our revenue. So that would be Imperium, and followed by Node Ops and Builder Plus. To the next question, how sensitive is your business model for the price of Ethereum specifically? And do you see a future where you diversify into other chains? So, um, with respect to sensitivity, we're obviously very sensitive to the price of Ethereum in terms of the value of our balance sheet, because we hold a lot of Ethereum. And we have borrowed against Ethereum on Aave, so we're sensitive there as well. In terms of Imperium, that's something that's actually not very sensitive to the price of Ethereum because of the way in which we're doing it. We're kind of putting bands around price ranges and looking to reallocate those bands. So that's something we're really excited about when we think about 2026 and the goals is our business model would be less sensitive to the price of Ethereum, at least from a revenue generation and profit generation standpoint, than we currently are, which I think is a much better place to be in as a company than being completely dependent on, the price going up or down. Um, and as the second part of that question was diversifying into other chains, um, unlikely we would go into other chains unless they fit into the Imperium or Builder Plus business models, right? If the question is, hey, would we go buy a bunch of Bitcoin and leave it on our balance sheet as a traditional debt, zero interest, zero desire to do that. We're looking to grow, have highly scalable revenue that's high margin, and holding an asset that we hope goes up is not really a plan. So that's not really in the cards. So the next question is, what differentiates BTCS from larger staking providers like Coinbase and Lido? Um, I mean, those are very different business models in their own right, right? Coinbase is an exchange, a staking provider, a payment processor, a lot of other things. So if we just look at the staking business of Coinbase, I would view that as a competitor to um, BTCS is node ops, that we stake our own assets. The difference is we don't take other people's capital to do that. We somewhat do that in a almost outsourced way through Rocket Pool, I think is the most simplistic way to think about it, in that we don't take customer funds and we don't take a fee of that. We are a node operator for the Rocket Pool ecosystem, in which we share in the fees of other people's capital. Lido is very similar to Rocket Pool. They're a on-chain staking provider. So both of those businesses are relying on other people's capital, and they take a fee on that. We're doing it with the company's capital, and in the case of Rocket Pool, use do benefit, and I think it's between a 30 and 40% increase in staking rewards by running nodes for Rocket Pool versus just running solo nodes, albeit it comes with a lot more of an accounting record-keeping headache and technical um, infrastructure kind of stack implementation. It's substantially harder. Um, but we're a very different business to kind of to get right back to your question. They're not in the block. Neither of those businesses are in the block building space, and neither of those businesses are in um, the DeFi activities that we are with Imperium, to my knowledge. So if you look at that, 88% of our revenue is coming from alternative business lines that neither Lido or Coinbase, to my knowledge, are involved in.
All right, Charles, thank you so much. That's all the time we have for questions. Thank you again for your presentation and time today.
Yep, thank you so much.